our financial planners travel the globe to gather the latest information and brightest ideas and bring them back for our clients. Just before Christmas, our founder Alex Jamieson attended the exclusive CFA Equity and Valuation Conference held in Philadelphia. The who's who were in attendance discussing interesting and new concepts, all with a hope to gain the edge on fundamental analysis of shares and the broader market. Although most of the event's discussion was waist deep in financial modelling and mathematical equations, there were a couple of important insights. Jeremy Siegel, a professor in finance from the University of Pennsylvania, provided an insightful discussion on the power of the PE ratio. Let's hear from Alex to summarise what was covered.
So history is really important when it comes to the financial markets, and we use the historical information a lot in our day-to-day activities, and it provides us a little bit of insight on what to maybe expect into the future as well. So historically, the US share market since 1802 have produced an annualised return of 6.7%, and that's compared to bonds, which is 3.5%, and gold, which is 0.5% approximately. And so that information is quite helpful for us because it then plays into what's called the PE ratio. And what the PE ratio stands for is price-earnings ratio. And so essentially since 1881 to now, that PE ratio has been around 15 times. Now, PE ratio is used quite a lot in the financial media. You'll be reading an article about a company or the market, and they'll quote the PE ratio as this or that. And they use it in, I guess, as a general rule of thumb measurement to say whether a share or the index is either over or undervalued. It's just a quick reference point. If we get into a little bit of maths, it sort of helps explain really what that information is saying about the PE ratio. And it's really important. A lot of people just use these numbers but forget what they actually mean when they're talking about PE ratios. But the PE ratio is a fraction, so it's 1 over 15. And basically, if we calculate that fraction of 1 over 15, it works out to be 0.067. Now, if we change that number into a percentage, it's 6.67%. And you'll remember earlier that that is actually the long-term returns of the US share market.
Please also remember that before you embark on any strategies regarding the PE ratio, you should always seek professional guidance from a licensed financial planner. And of course, I recommend the team at AJ Financial Planning.